Sell-off in equities and precious metals led to significant declines across North American markets. Have a look at the TSX. It is down 1,100 points right now, taking it back down under 32,000. Remember, it was up above 33. And take a look at some of the other markets in the U.S. S&P down about 0.5%. The Nasdaq down over 1% at this point. So should investors be worried, or is this just a blip? Let's go to Young Yu Ma. He's Chief Investment Strategist at PNC Asset Management Group. Thanks for joining us today.
Thank you. Great to be here.
We had always expected, many analysts had expected gold and silver to come down. There would be a correction. You're seeing it come off quite a bit today. Is this just the strength of the U.S. dollar or something else at play?
Yeah, it's a very sharp move we're seeing today, no doubt about it. And silver, the sharpest move in decades. I think there's a few things in play here. I don't actually think the strength, it's quite modest strength we're seeing in the dollar today, and a reversal of some of the weakness we've seen in the past couple of weeks. I do think that was a trigger for today, but I don't think that it explains the move. I think ultimately what's taking place in precious metals is that there had been too much froth in some of those trades, probably too much leverage, and people who were positioning too aggressively. And once that started to turn down, that momentum built on itself, and you're probably seeing overly leveraged positions being unwound now. So I think it'll find a level where it stabilizes, but I do think that right now we're seeing that kind of volatility that's very extreme because of the froth that was built up.
Okay, let's get to some concerns that still exist around tech and the big Meg 7 as part of that. Despite some positive results already this week from Microsoft and Apple, investors aren't liking these stocks much better. Tell me what you see beyond those quarter results that perhaps investors are tuning into.
Well, investors didn't like Microsoft's results. They were okay with Apple's results. I think they liked Meta's results. So it's a mixed bag, and I think that's noteworthy. And what we'll see more of this earnings season and for the rest of this year is that kind of dispersion, and investors in the market really looking to see who is seeing payoffs from these big AI investments that they're making, that these companies are making. Some companies are seeing early payoffs, and the market's going to reward that. Some companies, that payoff might be either a bit further out or in question. And I think the market is going to take a more skeptical eye this year to see that massive amount of investment, especially from mega cap companies, but from a lot of companies, that's actually starting to see benefits, and the trajectory remains one of growth and efficiency from that spending. So I think the market's going to be more exacting this year. I think that's a theme for 2026.
Okay, so how are you positioning in tech? Are you keeping with the hyperscalers? Are you trimming on that and moving elsewhere down the line?
We like diversification. We like the AI theme. We don't think it's going away. We think it's here to stay, and it has a very long runway. But we don't want to be overly levered to any one area of AI or any one, certainly not any one company. We think there are going to be a lot of winners. It's going to be pretty broad-based, and that strength and benefit and efficiency from AI is going to proliferate throughout the economy, not just the technology names. But we like that area, but we want to stay highly diversified within AI. If we remember from the lessons of the late 1990s and early 2000s, some of the early winners turned out not to be the long-term winners. Some companies that weren't even on the radar in the mid-1990s or even late 1990s turned out to be big winners. So it's important to be diversified in this area. We know there's going to be a lot of shakeups, a lot of dynamism in the space. So we want to stay exposed, but we want to stay very well diversified.
Okay, so are you looking at opportunities for investment outside of the U.S.? If so, where and why?
We do think internationally is an increasingly important place to look for diversification. Part of that has to do with some areas of growth, such as emerging markets. There are some areas of resources in South America that are valuable to support some of the growth in the rest of the world as well. But even Europe, there are some areas where you see kind of the convergence of fiscal stimulus and governments willing to spend it, and valuations where it might not be as stretched in some areas. So we think that diversification is especially important now. We think we're probably actually going to see lower correlations between international markets and North American markets this year than we've seen in the past. And that lower correlation is beneficial for portfolios as well. So it's a combination of technology, a combination of growth, fiscal stimulus, natural resources. We think there are various elements, but that diversification internationally is more important than ever this year.
Okay, I also want to get your take on the U.S. Fed chair pick by Donald Trump. That obviously bolstered the U.S. dollar today, but what do you think it means moving forward for the rate of cuts?
I don't think it actually changes a trajectory much. I think at the end of the day, there are many voting members on the Fed. They're going to be looking at the data. They're going to be assessing the trajectory of inflation, not just the historical data, but how much AI, for example, and other technologies might be helping to bring down inflation. They're going to be assessing the labor market. I think ultimately they will settle on the same path that they would with a number of different potential Fed chairs, because you do have a committee that votes, and these are all very serious and thoughtful people. So I think there's a knee-jerk reaction sometimes. It's perhaps bigger than warranted. There was also a knee-jerk reaction, if we recall, when Chair Powell was nominated as the Fed chair many years ago. The question then was, does someone of his background and business experience, is he going to be someone who's able to lead the Fed and interest rate policy well? And we think that is proven to be the case. So oftentimes these knee-jerk reactions aren't as warranted or aren't as concerning as they play out to be in the future.
Young Yu, thanks for joining us. Appreciate your time very much on this Friday.